Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, November the 14th, 2023. I apologize for the lateness in getting this posted today, but today's market, in combination with what we've actually seen from that late October low, the breadth of the market today was very, very strong. It was 11-1 advances decliners, 11-1 on the New York Stock Exchange. That's very large. And what it does is that it goes into my brain and comes back out that there's something much bigger at hand right now. And so I've had to go back and revisit at least what I'm counting as a primary B wave. And that the reality is that we are likely going to get ourselves up to at least the highs, which at this point is 4807 basis the December contract here in the S&P. And so I've recounted what we did coming down. So at best, I'm thinking that we might be in a 1-2-1-2. And so we're in the third wave going up. And again, that may change. And what I just want to say at this point is that Elliott wave is not a science, it is an art. And this whole wave count, actually from the January 22 highs, has been very difficult, has been a series of threes, and basically even from the October 2022 low has been very, very difficult because we had a lot of explosions within breadth of the market that kind of came within a third wave and then reached a high, stopped, and then we got this. There was that high. Then we got this very elongated tumble down. Actually, no, it goes even further than that. But we got this tumble down, and then we launched once again. Now, when the breadth of the market started to really explode about the third, so right in here, actually, we had June the 3rd, we had a very strong up move. Yeah, right in here. And the breadth of the market was very, very strong. So indicating more or less that it was basically within the third wave. But then we kind of we went around, we did one little pullback, and then we had a strong breadth in the market. And then today, now granted, it was in a reaction to the CPI numbers this morning, which I guess just sealed the deal for a lot of institutional traders and just a lot of traders, and that the Fed was done hiking rates, so that the next step would be that they're going to begin to cut the rate, even though it may not take place until next year, like May or June. We're seeing a lot of money move back into the markets now, and again, as we move into year end, it's a lot of prep work. And again, what everybody always wants to think the market is forward thinking. And so we're really investing for what's coming up. And there's just been a lot of changes, and there's a lot of other elements that kind of come in to form what are we doing and why. Now, again, we're kind of also reaching a point in the market where I would suspect we're going to get a day here in the S&P where we're going to have a down 50 day. And maybe it's going to be interpreted as a reversal. But in honesty, what I'm really looking at is that our 4-hour chart is overbought. The daily's kind of getting overbought. The hourly's been sitting at overbought. RSI, on the 4-hour chart above 81 or closing out at 81. So again, would be looking for it to kind of relieve some of the overbought and pull back. But because of the strength that we've had in the market, that it might be just a sudden pow, a big old blast to the south. And so again, I'm not going to be interpreting that other than just corrective within this ongoing fifth wave or ongoing third wave. So what I thought could have been a wave 2 is now reversing, and it's being a wave 3 up. So again, my apologies, but if you would have asked me, did I think that the market would just explode and we'd see all this incredible breadth against the backdrop of everything that was going around the market, including what's going on within our government, being able to shut down, what the conflict in the Middle East, et cetera, I would have said no. No. In fact, we had from the Fed, because they had a dismal 30-year bond auction just last week, that, gee, should we expect an explosion to the upside? I'd have been no. But I would have been looking for it in a wave 2, in a form of wave 2. But this breadth happening where it's happening is beginning to rip that apart, because again, and part of my conversation with another analyst tonight was discussing and looking at, well, we've got to look at the characteristics of the wave, or the wave personalities. What do we look for in a wave 2? We're not necessarily looking for this breadth of the market to kind of give an explosion, to increase dramatically, to see these big up days like we saw today, where the Dow Jones up 500, the NASDAQ it was up 350, the S&P was up, the cash market closed up 85. So again, these moves are not necessarily characteristic of a wave 2. The move itself getting up as high as it did, yes, but as quick as it did kind of presents a little bit of a dichotomy. So I'm really going to try to pull it in and deal with exactly with what we got going on right in front of us. So I do expect additional follow through, but that does not discount or take away from the necessity that we have a pullback. So inside of all this, if I'm labeling this 1, 2, 1, 2, then we're inside that third. So we've got 1, 2, 1, 2. We're inside the third. We should have some additional. So I'm feeling very strongly that we're likely going to come in at 46.36 and possibly tomorrow. Now, again, if we get the same reaction off of PPI that we got off of the CPI, 46.36 is pretty much a given, right? So we're sitting around 45.14. We just got to add. If we do another up 80 day, where are we? Right? 94, 4,600. So then again, the next fib above that takes us to new all-time highs. And trust me, I'm also now having to not necessarily backtrack, but go back and review what I have counted and how that may change. And again, I'm not doing it against a science. I'm doing it against an art and its interpretation of this very difficult market coming off of that high. So the all-time high as it stands today, from that point, January 2022, up until now, it has not been an easy market to track and plot and say what's coming next. So I'm going to trim it down to what we got really right in front of us. And so my expectation is that we will definitely get an additional rise within this third wave. If wave 1, you can just do the math yourself. 44.07 on the top, 41.21 on the bottom, pretty big wave 1. So I'm looking for at least to equal. That puts it at 46.36. Wave 3, we're just going over that tackle with the previous count. Wave 3 is normally the longest and the strongest. So in that case, I'm looking for it to go higher than 100%, which is 46.36. So we're looking at 4,700 suddenly. And we're looking at that in basically 2 weeks time. So what does that suggest? Corrective or impulsive? So I think it's impulsive. And so that's why I need to go back and restructure what we're doing. Now, I know that there's a lot of people that you're positioning yourself against what I'm telling you. And I I'm not saying that, somebody was right, somebody was wrong, because I continue to indicate, even if I was labeling this as an intermediate wave too, I continue to indicate that we had higher levels yet to reach. So again, now that's still the case, but now we're adding in a layer that there's a strong possibility that new all-time highs are now going to happen. Does that suggest that the market's not going to turn lower? Not at all. Not at all. And for all I know, folks, it's like there's too many things out there that something could happen and it just drives this market turn and drives it lower. But my point is, even if that happens, we're seeing that the market turns and just comes back up, because now they've got this input from the market basically saying the Fed is done hiking rates. And so we're going to go from inflation. And guess what? If we're not going to go have an inflationary period, well, then we're going to have to start to have some deflation. And then what happens then? So again, rates start to come down. And so we're going to get into a strange place within the market where lower rates are not necessarily going to equate to pushing the market higher. But that's not today or tomorrow. So for tomorrow, I would be looking for the S&P to react in the same way on as it did today. So maybe not as intense, but I would look for it to kind of give us another boost and get above 45.28, which basically we reached today. So, and I just want to go over and let's take a look at the daily and the moving averages and what we've got going on. You could see what happened. We burst above the 100 and it just didn't stop. That happened immediately this morning, and it just stayed, and it stayed up there. So not that it came, we had a little pullback, but it stayed up there. Pullbacks were minimal today. So everything now, we're going to get the 20, again, the daily, so it takes a little bit longer, but this is going to turn. The 20 needs to get above there, and eventually there. So again, we've got this mixed picture coming from our moving averages on the daily chart. If I look again on the hourly chart, everything is pointing higher. The 20, the 50, the 100, the 200, all in alignment to continue to move up. Over in the NASDAQ, it's kind of the same story. A little bit different on the count, but I'm still using a 1-2, and I'm saying that I got to rearrange these because I'm still leaving that as kind of a wave 4 right now, which means we're still in a minor fifth, and that would suggest that we're going to go above, what was that other level? That we're going to go above 16,261. Now, again, bringing it back down to that hourly chart. No. This one, thank you. That I can put up some fibs for what we can look at possibly. Come on, go right there, thank you. For wave 3. So wave 3, 618, I think is a given. 100% is 16,485. So that already takes us above that 16,200 number. And then if we're looking at it, here we are. Now, basis the December contract, the high for the December contract is 17,440. Now, that's going back, and of course, there's been much in between. So, but 1.618, so the all-time high still remains 16,768. So this takes us to new highs. And if we could continue going, it takes us to strong new highs. So again, I've always left open that possibility that even if I'm going to continue to count this as a primary B wave within the NASDAQ, which now, I have my doubts, that type of a move would be not impossible under an irregular B. And again, the same thing in the NASDAQ as in the S&P. The market itself has been very, very difficult to pin a wave count on because it flips often. And so what I'm trying to do is stay up with that without appearing as like, oh, you go from this to that to this to that, as some of you have noticed, and I apologize. But it's not necessarily the analyst as much as it is it's the market itself. So what we're going to look for now, let me just kind of put this back into place. Get out of there. Go right here. Come on. Let me just reset this. We're looking here on the inside of this. So again, 1, 2, 3, 4, 5, 1, 2. And this means we're in 3. And it's kind of almost could be 1, 2 again. So 1, 2, 1, 2. And then again, 1, 2, 3, 4, 5, a 3, 4, 5, a 3, 4, 5. That would be the count. And again, that's kind of it's because it just continues to subdivide. So we're inside the 3 of a third. And so we've got 1, 2, and then we've got 1, 2, and then we have a 1, 2, 3, 4. We're looking for that 5, maybe up to here, get a small pullback back down to here, and another 5, take us up higher above 16,000. So those remain. Started to see them today on an algorithm that I run on TradingView. And I was like, boy, above 16,000. And it was really pegging it that it could have happened today. And I got close. It definitely got above. It got above 15,900, trading above 15,900 right now. So again, larger pullbacks notwithstanding, I believe that the market still has a fair amount of upside to put in. And again, my apologies for possibly not catching this earlier. But today's breadth of the market, this was one, and I thought, okay, kind of getting up there. Maybe we're just putting that in. But today's being even stronger than this one, I, made my decision. So this is where I'm going to leave it. And again, tomorrow morning, pre-market, we have PPI. And outside of that, U.S. retail sales, Empire Manufacturing, those are all at 8:30 a.m. Then we have business inventories at 10 a.m. And we still have Fed folks out there talking. So at 10 a.m. and at 3:30 p.m., all Eastern time. We have Michael Barr talking, and he's a vice chair, and the Richmond Fed President, Tom Barkin. So again, I'm sure that they're all going to be basically just talking in line with, expectations from the Fed. All right, so next update will be on Wednesday, November the 15th.